Welcome to The Explainer. Today we're diving into a massive question that's on a lot of people's minds. Can you, and should you, actually trust AI with your money?
Okay, let's just jump right in, because this isn't some sci-fi future we're talking about. This is happening right now. People are turning to tools like ChatGPT for huge financial decisions, things like mortgages, taxes, you name it. I mean, the appeal is obvious, right? It's fast, it's easy, but the accuracy? Well, that's the million-dollar question, and that's what we're here to figure out. So here's how we're going to tackle this. We'll start big, looking at how AI is already shaking up high finance. Then we'll zoom way in on a fascinating study that really put these tools to the test. And finally, we'll pull back out to talk about the risks, the rules, and what this all means for you.
First off, let's get one thing straight. AI isn't exactly the new kid on the block when it comes to money. It's been a powerhouse on Wall Street for years, working behind the scenes, analyzing markets, and driving massive trades. The big difference is that now, that same power is starting to move from their world into our hands.
And when I say fast, I mean, wow. Just look at this timeline. In 2018, we got the first big breakthrough with models that could just generally understand language. Just 2 years later, we had AI trained specifically on financial data. And now we've got these hyper-specialized models from giants like Bloomberg that are built from the ground up to speak the language of finance. The pace is just incredible.
So, what makes these AI models so good at this stuff? Well, it's way more than just crunching numbers. They get the nuance, the jargon, they can analyze breaking market news in real time, and get this, they can even process charts, tables, and listen to audio from company earnings calls. We're talking about a completely different level of capability here.
Okay, so it's one thing for an AI to analyze Wall Street trends. That's cool. But what happens when you ask it about your mortgage or your taxes? That, my friends, is where the rubber really meets the road.
To get an answer, a group of researchers did something absolutely brilliant. They took thousands of questions from standardized financial literacy tests. We're talking the same kind of questions used to certify actual human advisors, and they threw them at all the leading AI models. And they did it zero shot, which basically means the AI had no prep. It was a cold pop quiz.
So, what did they find? The big headline number across all the different models was an average accuracy of about 68%. Think of it as a C+. It's passing, sure, but would you really want a C+ student managing your retirement fund? Probably not. But hold on, that is not the whole story.
Because here's where it gets really interesting. When the researchers looked at just the top-tier, state-of-the-art models, your GPT-4s, your Claude 3.5s, that accuracy number shot way up to nearly 80%. That's a huge jump, and it shows that this technology is getting better, and it's getting better fast.
And this chart right here, this is probably the single most important finding from the whole study. There is a massive, almost 20-point gap between the average AI and the best ones. The takeaway is simple. The specific model you use matters a lot.
They also dug a little deeper and found that the AI's performance really depended on the topic. It was way stronger in areas with clear-cut rules, things like basic tax questions or loan calculations. But it was a lot more hit or miss in areas that are more personal and nuanced, like building a budget or picking a credit card strategy. Okay, so knowing all of that, knowing where it's strong and where it's a little shaky, how can you actually practically use these tools to help with your finances without getting into trouble? The first, and honestly, maybe the most useful way, is for what the experts call linguistic tasks. And really, that's just a fancy term for saying the AI is an absolute beast at reading and understanding dense, boring documents that you would rather do anything else than read yourself. Just think about it for a second. You could feed it a 50-page insurance policy and say, "Give me the 5 most important bullet points." Or ask it to scan a credit card agreement and pull out all the key terms, or even look at a bank statement and flag any potential hidden fees. This is a total game changer for cutting through jargon and saving a ton of time. All right, the next level up from that is using AI for what's called financial reasoning. Now, this isn't about the AI giving you a final, definitive answer. This is about using it as a tool to help you think through different scenarios and compare your options so you can make a smarter decision. This is perfect for when you're in that planning phase. You can ask it to model out the difference between a fixed and an adjustable rate mortgage if interest rates go up or down. You can ask it to generate a step-by-step checklist for getting out of debt. It's kind of like having a financial sparring partner to help you get all your ducks in a row before you pull the trigger on a big decision.
Okay, but now we have to talk about the huge disclaimers. Because with all this incredible power comes some very, very real risks. So let's broaden our view back out and cover the rules you absolutely need to follow to use these tools safely.
You have to remember, these tools are not perfect, not by a long shot. Their information can be totally out of date, they can hallucinate, which means they just make stuff up that sounds correct but is completely wrong. There's even something called look-ahead bias, where their training data can make them way too optimistic about how markets perform. And it should go without saying, but never, ever put sensitive info like account numbers into a public chatbot.
So let's just break this down into a really simple framework. Think of it like this. It's totally appropriate to use AI as a teacher. Use it to learn what financial terms mean, to understand concepts, to do basic loan math. But you need to be extremely cautious when it comes to getting personalized advice for complex things like tax planning or investment strategies. And that brings us to 4 golden rules. Seriously, if you're going to use these tools for your finances, you have to follow these. Number 1, always ask for its sources. Where did you get that info? 2, make it show its work. Ask for its step-by-step reasoning. 3, verify all the numbers, and I mean all of them. Double-check the math yourself. And number 4, and this is the big one, for any major decision, talk to a qualified human professional. Use the AI to prepare, but make the final call with an expert.
And really, it all boils down to this one crucial point, which the researchers themselves said best. These AI models are excellent assistants, but they are not substitutes for professional expertise. They can help you learn, they can help you organize your thoughts, but they cannot and should not replace a real, certified expert when the stakes are high. And that leaves us with the huge question that we're all going to have to grapple with going forward. As this technology gets more and more powerful, that line between a helpful tool and a trusted advisor is going to get blurrier and blurrier. So, when it gives advice, who is ultimately responsible? That is the challenge that's going to define the future of our financial lives.